Hello, I'd like to welcome you to our webinar, Preparing for an Audit, which is provided by Whittlesey. And today we're going to talk a little bit about preparing for an audit for a nonprofit organization. And although the focus of our discussion is primarily going to be geared towards nonprofit organizations, I think for those who are involved with audits of other types of organizations, we'll kind of get some good principles, ideas, and thoughts and strategies out of this discussion that will help really for anyone to help prepare and do a better audit overall. So my name is Ed Sullivan. I'm a partner at Whittlesey.
And I'm Tom Wood. I'm a manager.
And Tom and I both going to be doing a presentation today. We both have extensive experience working with nonprofit organizations. We spend pretty much all of our time, all of our client service time working with nonprofits. And also as part of just being involved with nonprofits, we also have served on the board of directors of nonprofits. So we're able to kind of look at our clients and look at organizations from really two sides of the table. One as an advisor, as an accountant, an auditor, and an advisor, but also as a board member dealing with some of the management issues and so on that some of you and your organizations have to deal with overall. Just a little bit about the nonprofit practice at Whittlesey. Whittlesey is a office of three offices located in Hartford, Hampton, and Holyoke, Mass. We cover a variety of industries overall, but our nonprofit practice, which is our largest focus, our largest niche in the firm, we work with about 350 different nonprofit organizations, very different types of nonprofit organizations, as you can imagine, social service organizations, foundations, arts, religious organizations, trade groups, real estate, nonprofit real estate, employee benefit plans, and also do quite a bit of work for financial statement audits with both federal audit requirements as well as various state audit requirements, whether you be from Connecticut or Massachusetts, and provide advisory services and technology consulting to a lot of our nonprofit organizations overall. So with that, Tom, why don't you just kind of give us an overview of what you think, what we're going to be covering today in this session.
All right, so we'll kick it off with the responsibilities management versus the auditor, who's responsible for different parts of the audit. Then we'll get into some best practices to help make this process as smooth as it can be. We'll follow up with some specific audit areas. We'll look at some line items that you might see in your financial statements. And then we're going to circle back with the benefits of an experienced auditor.
Great. So I'll start off with some of the responsibilities and, moving ahead. As you know, the audit is an independent review of your financial statements. A lot of times, particularly for nonprofit organizations, it's required by either a funding source or a federal or state agency, perhaps a foundation. But also individual donors tend to use the audit because it kind of gives sort of a stamp of approval of the organizations and its practices and so on. So as part of that, management has some responsibilities in the audit process. And really, management has most of the responsibilities during the audit process. When we're all said and done, we'll talk about the auditor's responsibilities, but which is really just to provide an opinion on financial statements. But management really is responsible for the fair preparation and fair presentation of financial statements in accordance with generally accepted accounting principles. And that includes trying to determine and develop the proper accounting policies so that the organization's accounting policies are in fact in accordance with generally accepted accounting principles. And that also includes the design, implementation, and maintenance of internal controls. And bringing these all together, management is responsible that the financial statements be free of material misstatement, whether or not that misstatement is due to either fraud or error. And also as part of this whole process, management, which is probably the biggest piece, one of the biggest pieces, is responsible for preparing for the audit and make sure the audit can be performed in the smoothest, most efficient way for everyone involved. And I think that's important because you want, as you go through the audit, obviously we have the compliance aspect where we have to do it for certain funding sources and so on. But as part of the audit, as you go through and plan and get ready for it, the more you're able to do, I think provides us the opportunity to be able to add a little bit more value to the audit and to be able to look at areas and opportunities to either provide recommendations for improvement, whether they be around controls or improvements for operating efficiencies, and use that to help make the audit a much more valuable tool to you and to your organization overall. So the next slide, auditor has responsibilities, as I mentioned a little bit earlier. Really our responsibility is to provide an opinion on the financial statements. So when you look at the document of the financial statements, there's basically 1 or 2 pages that has our report and our opinion. When we're all said and done, that's what you have engaged us to do, is to provide our opinion on that. So we need to do that by performing an audit in accordance with generally accepted auditing standards, professional standards, and we need to follow standards. And additionally, if you have requirements by either federal or state funding source, we also have to prepare the audit, perform the audit in accordance with government auditing standards. So the result of that will be, as I said before, we'll express an opinion on those financial statements and also communicate with government, the governance of the organization, to discuss the results of our audits and also to discuss any opportunities for either improvements in processes and procedures or opportunities to provide value to the audit beyond just the document that's provided.
And to add to that too, again, our opinion is whether or not the financial statements are free of material misstatement. I think sometimes people forget that, as well as an audit may find fraud, but it's not designed to detect fraud.
Correct. Right. So obviously we're going to go through and try to obtain evidence that's going to support our opinion, which is, as I said, which we will do. And I think also just to kind of part of some of the expectations of an audit, we do, as part of the audit, evaluate and review internal controls of an organization. However, we do not provide an opinion or any type of audit on the controls of an organization. But as I said earlier, if there's an opportunity to advise on some sort of improvements, we're going to provide that to you. So with that, we're going to talk about best practices in the audit process. And Tom, why don't you just kind of tell us a little bit about some of the best practices, maybe start off with planning and go from there.
So there are 3 basic steps: communicate, plan, and prepare. With any relationship, personal or professional, communication is the foundation. Planning is also important because those who fail to plan to fail. And then finally, with preparation, it's great to have a plan, but if you don't follow through and execute that, you're going to be left with an audit that's not going to be as smooth and as stress-free as you'd like. So we will start off with communication. And again, you want to reach out to your auditors throughout the year, not just when your fiscal year end is approaching or field work is approaching, but throughout the year to discuss things such as significant or complex transactions. Again, we're going to need a little bit of time to do some research, and as management, you'll need some time to implement some of these transactions and record these transactions correctly. Also, the effects of upcoming accounting standards. In the next 2 to 3 years, we have a new standard that will be required every single year. And again, implementation is going to take some time in your books and records, and as well as on the financial statements. We'll have to go and update some new footnote disclosures, etc. And then finally, you always want to communicate regulatory or tax notices as soon as you get them. Because again, that could impact the nature and scope of an audit, especially if it's from a grantor. If it's from the state or federal government relating to your A-133 or your state single audit, and they're requiring a specific grant audit, that's something that we want to get out ahead of as soon as we can. Moving on to planning. So towards the end of your fiscal year, before field work begins, obviously, you want to schedule all the meetings, whether that be the audit committee, the finance committee, the board of directors. It's good to get those on the calendar as soon as you can. I've had one client say that getting everyone to agree to a date for a board or finance committee meeting is like herding cats. It can be very difficult to get people that have very different schedules together on one day and on one time. We also want to know, do we have an entrance meeting? Do we have a results meeting? Will we be meeting with management before any of these meetings? And will there be a final meeting with the board of directors at a very high level? From there, you want to determine a timeline. So who's going to be responsible internally for the audit needs list? And I had one client many, many years ago. She would not let any of her staff take any vacation until every item on that needs list was checked off. That might be a little extreme, but again, it's good practice to plan out who's going to be responsible for what so that all the deadlines are met. Moving on to field work. Again, how many days do you expect the auditors to be out in the field? Is it going to be a few days or is it going to be a few weeks? And again, you want to work backwards from your deliverables and the board meetings as well, just so you have enough time for everyone to review the drafts of the financial statements, the tax returns, etc. And finally, the ultimate deadline is really regulatory and tax. So the 990, the information return for exempt organizations, always due 5.5 months after year end. That can be extended, and you need to communicate whether or not you do want to extend that. The same for a state single audit has a 6-month deadline that can be extended. However, the A133, the federal single audit, has a 9-month deadline. And that's something that can't be extended. Moving on to preparation. So now that you've communicated and you've planned, now it actually comes down to preparing and executing. So before fieldwork begins, you want to make sure that you have a trial balance prepared and that you have reconciliations completed. Again, you want to send that off to your auditors at least 1 to 2 weeks before fieldwork, just to give us some time to look at the numbers ahead of time. We don't want to show up for our first day of fieldwork and be surprised by anything. If there are any changes or any large questions, we'd like to be able to send them back before we actually come out and begin our audit. Next, we want to make arrangements for fieldwork. That includes parking, building access. Sometimes you need to sign in. Sometimes we get a little badge to swipe in. And you need to reserve a conference room or an office or some space. And again, that goes back to, well, how long will we be on site and how many individuals will the audit team be comprised of? And finally, along those same lines, the most important thing in recent years, what is the Wi-Fi password? Again, everything is digital now, sending secured emails back and forth. We need to have good internet access so that we can complete our job to make your audit a little smoother. Another recommendation throughout the year, just create one centralized place. If you have any changes to bank accounts, leases, we're always going to ask you if anything's been updated, and it's easier if you have that in one central file. So you can just hand it to us. We don't have to ask each individual question.
Good. Yeah, I think, Tom, the key, Tom, is communication throughout the whole year is very key, because I think it gives everybody an opportunity to kind of, at least at an earlier point in time, anticipate and deal with any issues or challenges that might be occurring in the financial reporting process. And both from our perspective and from your perspective, I think that's helpful to just be available. We're available throughout the whole year to advise and to help. Just give people a call, and we're more than willing to try to work with you to make sure that whatever issue or concern you have is dealt with properly and can be addressed timely, so it doesn't become a kind of a mad dash at the end of the audit to try to resolve some issues that have to have significant impact on maybe the financial statements, financial reporting in the organization.
Exactly. No one likes surprises.
Right.
Doesn't matter which side of the table you're on.
All right, and preparing, I think, is key as well. I think there's always pressure, particularly nonprofits, on fees. So the more you can do to prepare, the more flexible the fee structure could probably be. But also, the more you do prepare, which I think is really more important, is allows the auditor to be able to provide some value in other areas and some advice in other areas that might help either the controls of the organization or help the overall operations of the organization just become a little bit better, a little bit more efficient, and provide value beyond just, as I said before, the document of the financial statement.
All right, so we're going to kick off to some specific audit areas. So these are maybe not every single line item you have on your financial statements, but these are going to be the more significant ones. And again, these are some items that will be included on your audit needs list, and getting those knocked out ahead of time is going to make this process much easier on everyone involved. So we'll start with cash, which is your first item on the statements of financial position, your balance sheet. What we really want to know ahead of time, were there any changes to bank accounts? That means, were there any accounts that were closed during the year or open? Because again, our primary audit procedure around cash is confirmation. Again, we need to know if there are any new account numbers to confirm these new balances. Also, we need this information at least a month or so before, because we want to have all the confirmations mailed and received before field work begins. Moving down to reconciliations, again, just make sure those get completed timely. And if there are any unusual items, just circle those and make us aware ahead of time. If you're holding checks and leaving on someone's desk, not actually mailing them, that's something we want to know. Investments. The same thing as cash. If you have any new accounts or you closed any accounts, let us know so we can reflect those in our confirmations. Again, we want to send those out at least a month before field work begins. Any changes to the broker or custodian would also be helpful. Investment and spending policy, that's going to impact the nature and the scope of your investments. If you rebalance your portfolio or you spend more or less, there are also disclosures relating to that as well. Fair value inputs, that could impact level 1, 2, 3, or net asset value. If you've gone and invested this year in some alternative investments, we're going to have some additional procedures that we need to perform if it's more than just your typical equity, stocks, or bonds, or mutual funds. One thing that could really cut down on the time spent auditing investments, prepare a roll forward. So that way, it starts off with your beginning balance, income, withdrawals, realized, unrealized gains. If that comes out to your ending balance, all we have to do is tick and tie the investment statement, which could potentially shave a couple hours off the time. And as Ed mentioned, the more time that we have to free up and look at other areas, the more value that we can add as part of your audit. Receivables. We've got a couple of different kinds of receivables. Basic accounts receivable, prepare an aging that actually ties out to the trial balance. If there are any collection issues, we're going to want to know so we can determine if your allowance for doubtful accounts is adequate. For grants receivable, again, going back to the state single audit or the A133 federal single audit, we want to tie this out to a grant schedule, which would have all the grants that you receive and have a balance for receivables at year end. Promises to give. The main issue that we see, Ed, I think comes down to completeness. Do we have everything that has been pledged actually recorded as a pledge? And sometimes there can be some timing issues. So we'd recommend having someone from the development advancement department just reconcile that back to their records to make sure we have everything that should be recorded. Fixed assets, one of my favorite areas to work on as a staff, especially trying to update that depreciation schedule. Having that completed ahead of time is always important. And we're going to want to look for any significant additions. So if you purchased any major items, have the invoices ready for us to review. Accounts payable, again, very similar to receivables. The aging is imperative. Just make sure that ties out and everything is current. We're also going to want to do some cutoff testing. So having a list of material disbursements that were made subsequent to year end, have support available for us so we can determine if they should be accrued back to the fiscal year end that we are auditing. And then finally, one of the last items on the balance sheet is debt. And again, if you have any new debt agreements or any of the renewals of a line of credit, have those agreements in one central place so we can just upload them to our files, have that amortization table prepared so that we can help prepare the footnotes in a timely manner. Covenants is something we see that's maybe not as prevalent, but if you do have covenants, you have a debt service coverage ratio or some other ratios that you have to calculate. Have you been monitoring your compliance with that? And again, this is something that you should be tracking, so it's not a surprise when we get to the audit. We see that you've maybe blown a covenant and we have to go and record some debt as current as opposed to long-term. All right, moving on to equity, net assets. The first thing you want to do is make sure that all of the prior year audit adjustments have been made so that our beginning balance ties out to last year's ending balance. That is crucial to getting the audit started. That's the first thing that we do as soon as we enter the trial balance into our auditing software. And another area that does take a lot of time, and again, the more legwork you can do as management, the more time you free up the auditors to do some added value work, is tracking of net asset restrictions, whether that be donor or board designated. We just need something that reconciles back to the financial statements.
And I think this is probably an area where a lot of clients could really, spend some time on and look at and go through their donations and make sure that if there are particularly restrictions attached to donors' requests, that those are captured and that we capture those within the proper period as well. So whatever period the restriction has been met, we have to make sure we account for that the proper way as well. So this could be really helpful in kind of making the process go a little bit smoother.
Yeah, and a lot of the time we see a somewhat hokey Excel spreadsheet that might have a few different columns. The more you can have your accounting software do, so using the fund or the classification settings in that software, the less actual manual input you'll have to do. And that way at the end of the year, you can go and hit a report and everything spits out and it's ready to be placed into the financial statements. So again, just make sure you're really utilizing your accounting software to its fullest potential. All right, so now that we have the balance sheet done, we'll run through a few items on the income statement and your statements of activities. And we'll start off with revenue. Again, as a not-for-profit, contributions are a specific area that we're always going to look at. Have support available for any large donations. Again, anything that's material will tie back. And again, have someone in your advancement department double check that to make sure it's complete and that all the restrictions are properly recorded. When we move down to grants, again, having that grant schedule prepared and reconciled to the trial balance. I see this as an issue on maybe half of my audits where we'll get a grant schedule and it won't tie back and we have to go back and forth between us and management. It usually takes a week or two to get everything straightened out. And one of the areas we see particularly is whether or not the funding source is state or federal. So again, if federal money was passed through to the state and then to another organization before it reaches yours, that needs to be recorded as federal money. And again, that's going to have an impact on our major program determination for both the state single audit and the A133 federal single audit.
And I think it's key too to when you're looking particularly at the federal and state reporting to make sure that the expenditure reporting that you do to the state, the governing agency or the reporting agency, the expenses match up with the revenues that are in the financial statements as well. And that's the easiest way to reconcile back, is to go back to what did you report back to the funding sources in terms of how you spent the money, both the revenues and the resources came in as well as the expenses that went out. And that should be a big part of tying out the whole grant schedules and reporting there.
And then finally, we have expenses. So I just want to say, be prepared to answer any questions on variance analysis, whether that be current year to prior year or current year to actual, and then have support for those explanations. Because again, as auditors or our professional standards, inquiry alone doesn't constitute sufficient appropriate audit evidence, we need to support those inquiries with an invoice or a contract or something else to satisfy our professional needs. Moving down to payroll, one of the easiest things we can do is have a listing of all the employees that reconciles to the trial balance. And whether that's a calendar year or a fiscal year, you should be able to run a report out of your payroll software.
And it also should tie in with your reporting to the U.S. Treasury as well, as far as your payroll taxes and so on. A lot that information is summarized there, and you should be able to reconcile between the payroll tax returns, the trial balance, and the listings by employees. That should all be able to kind of circle around and come together as detailed for the payroll expenses. And that's generally in most nonprofits, that's the largest expense.
Yeah.
And so it gets a lot of focus and a lot of attention paid to it as part of the audit process overall.
Exactly. And then finally, we have functional expenses. And this is something that typically is one of the last things that we'll receive from management, and that's the support for the functional expenses. And with the new accounting standards update, a statement of functional expenses will be required, and we have to also disclose the basis for allocation of certain expenses. So again, we don't want to see this last anymore. This should be one of the first things that you have prepared. And with that, I'm going to kick it back to Ed to go over some benefits of an experienced auditor.
All right. So I think, in just looking at nonprofit organizations in general, I think clearly you want a firm that has extensive experience working with nonprofit organizations. And there are a lot of unique characteristics for nonprofit that experience matters. One, just knowing about the different aspects related to operations of a nonprofit, but also taking the benefits and best practices that we can find from working across a number of different clients in this industry. So, there is value there for any organization with an experienced auditor. And really that value translates to a better audit, but also provides the accountant the opportunity to give you some input to help you have maybe better controls, talk about controls either being more efficient or adding controls within an organization, trying to optimize the resources that you have so that the controls within your organizations line up with the size of your organization and the types of transactions that you have. Technology and cybersecurity, other area which are really, really high profile right now, cybersecurity especially. We read about it every day in the news. I mean, we just saw something the other day. It seems like there's one or two big companies every week or so that have sort of breach. Your organizations are subject to breach, obviously. You want to take steps to minimize that risk. And then moving on to just future accounting pronouncements, obviously knowing the industry, knowing about the industry. We've been talking to our clients for a number of years now about the new pronouncements that are coming out. Fortunately, we have lead time of several years before we have to implement them with a lot of them. But just recently we just implemented the financial statement reporting model, which was a big change. It was the first big change in a number of years. But you want someone who's going to be able to kind of alert you to that and help you prepare for that prior to just coming in when they're doing the audit and say, oh, by the way, we have to make all these changes. It comes back to that topic of communication we were discussing a little bit earlier. The more you communicate about the things that are going on with your auditor, the better it's going to be, the smoother it's going to be, and much easier getting to the end. And then just general advising to our clients overall, and help to make sure that they get the best advice in running their operations in the most efficient and effective way that they can. And that's so key, particularly in trying to support the mission of your organization. You want to be able to maximize the return of the assets that you have, so that your clients, the services you provide, the mission of your organization is met in the most effective and efficient way as possible. So I think that's all very key.
Right. As you mentioned before, again, the more prepared that management is, the more prepared that we are, the less time we're going to spend reworking, and the more time we'll have devoted to providing some additional advice to help out your organization.
Absolutely. Absolutely. Okay, so I think that's pretty much it for our presentation. Tom, great job. Thank you. And thank you to all of you for joining us. If you do have questions, please feel free to reach out to either one of us. Our contact information is on the screen here. You can either email us directly at the email addresses that are there, or call us on the numbers that are provided as well. You know, we try to, as I said, be available to our clients throughout the year to ensure that they're on top of the items and issues that are important to them. So again, if there's a specific question related to this session that we just had, please reach out to us. We'll be more than happy to get back to you and discuss that with you. So again, thank you, Tom.
Thank you.
Appreciate the input. Hopefully this has been helpful to you, and I hope you all have a good day. Thank you.